Okay, Nilesh is saying cumulative delta along with normal delta helps in avoiding bad trades. Yeah, it can also help you take good trades, but obviously you will need to spend some time with that indicator. All right, or even with normal delta too. Like if you spend good time with it, then what will happen is you will start picking up the nuances, and then you will be able to confidently take trades. All right. Now, I can give you some setups, but then what will happen is you will just get anchored to those setups, okay, and then you won't look at the context. See how difficult it is for me to design 20 entry and exit setups using this information. I can easily do that. But the reason I refuse to do that is because I have seen in my own trading, the moment I start focusing on a setup, I easily lose my focus on the context. And then it is a hit and miss game. It is a 50-50 game. If you're trading with setups, no matter how good it is, what the hit ratio is or what the success ratio is, I just don't care, because once you start trading with a setup, fixed set of rules, your trading will always be a 50-50 game. But if you look at the logical reasonings behind entering and exiting, well, you have a better chance of succeeding in the long run, right? Venkatesh is saying, Dean, does this delta divergence, all concepts that you covered can be used in all time frames? Well, preferably on intraday time frames. But if you're asking me, can I use it on a 5-minute chart or a 15-minute chart? Yes, you can use it on both. Phoenix is saying, hey, Dean, can we get more insight on imbalance on order flow, its relevance? Yeah, I'll go back to that. Jitendra is saying, sir, what is the correlation between max delta and cumulative delta? Well, max delta is calculated on each bar. It is the maximum that delta value reached on that particular bar. It is similar to the high value in a candlestick. It is the highest prices reached on that bar, right? So similar is with delta. It is the highest value of the delta that was reached on that particular bar. It does not have a relation with cumulative delta. Nilesh is saying cumulative delta shift seems tricky as we might get end up getting sideways day. Yes, yes. So that is where I'm saying that context is absolutely crucial to make use of these tools. All right. Now, imbalance. So Phoenix was asking about imbalance. Let us go to an order flow chart. This is a normal order flow chart. And the reason why we use imbalance is, unfortunately, in our case, the tick size is very, very low. Like for Nifty, it is 0.05. Even Bank Nifty, it is 0.05, and it is trading in 32 thousandths. All right. So this is ridiculous. I mean, if you look at crude where the tick size is 1, if you look at gold where the tick size is 1 point, uh, it is much better, to have higher tick sizes for at least instruments with such high, value. Okay. So what we have to do instead is to club a lot of ticks together to create that illusion of this kind of higher tick size. Okay. That's why we are using box. But let's say you are using tick by tick data, then every box on a price ladder will be made of one tick. So what you will have is, you will have, aggressive buyers trading at this level, aggressive sellers trading at this level, because this is the best offer and this will be the best bid at that particular point in time. And you will always see that best offer will be minimum one tick higher than the best bid, always the limit orders, always, because technically you have to maintain that one tick difference. All right. That is why two limit orders cannot trade with each other, and that is why we will always have at least one tick difference between the buy and sell orders. When the prices move higher, obviously some orders will be sold here, but when you are selling here, the corresponding buy order will always be one box higher. If we are plotting a tick by tick chart, which we tried yesterday and we failed miserably, but this example can be seen on a crude oil chart. So let us go there and watch that example. Yeah, now this is very interesting. Let us convert it to imbalance. All right. Now you go here, and now what is happening is, this is the minimum price has to move on this chart, one tick. All right. So if a seller has to sell, it has to come down one tick, buyer has to buy, it has to go up one tick. So this diagonal comparison makes a lot of sense. And I hope Nifty also comes to this one, point tick size soon, at least the indices. It's very, very, it's high time that the exchanges do that. It will be very, very good. Like if you look at E-mini S&P, the tick size is 0.25, I believe. All right. And the value is also low. So this makes sense there. So we want similar tick sizes on Nifty. Okay. And that is when, this diagonal delta will make a lot of sense. All right. So that is the significance. Ankit is saying joined late. Just wanted to know, did you discuss the formula to calculate delta? Yeah, it is very, very simple. I can just write it again for you. It is market buy minus market sell, right? All right. So it is very simple. All you have to do is take the difference between market buy and market sell, and that is your delta. All right. So I have discussed it in the video in greater detail, but this is a simple formula for that. Nilesh is saying also, if you can illustrate how we can use delta jump with order flow candle to determine if the move really has strength or weakness. Well, you are plotting it, right? You go back to this chart. Here you can see we are plotting it, but the problem is if you reduce it too much, the visibility of order flow chart becomes a problem. This is nothing but a bar chart. Okay, order flow chart is nothing but a bar chart. Only you have this bid ask value plotted there. So you can say that we were talking about this jump, cumulative delta jump, which happened on this bar. Now, if you go into the internals, sometimes they will be misleading. Okay, you might see, okay, limit sellers are coming in, this is happening, that is happening, and then you second guess yourself. You then see that, okay, these candles are going higher, but we are getting a negative delta divergence. So what to trust? All right, that is why, sometimes it is better not to look at order flow chart at all. Okay, because so much of information is here, it might end up confusing you. And I was so happy to see we can plot these two indicators on simple bar charts or VSA charts, and here you can use them much in a much better fashion than on a order flow chart. Kodialji is saying, I heard about commitment of traders. Yeah, there are two things, commitment of traders and contract reversal. And I discussed this point with Rajendran. He seems to understand the logic. He also explained it to me. I have watched one of his videos on this. For the love of God, I cannot figure this out. I mean, I know the formula, I know the mathematics, it's not rocket science, but I just cannot seem to incorporate these values into my trading. For some reason, I can understand the formula, but I cannot grasp the logic behind it. And even after that, incorporating it into my trading plan, it's just not happening. What do? I do always do the simplest thing, because I believe in Occam's razor, which states the simplest solution is always the best. I go to my order flow chart and I just don't plot it. I just avoid that additional information because I tried so hard for so long. First, it is very difficult to understand. Second, just does not make any logical sense. And even if you, for some reason, you grasp the logic behind it, it again is very, very difficult to incorporate it in your trading. And that is why I have stopped using it. Okay. If you want, I will have to refer to Rajendran's video, understand that concept once again, and then explain it to you. But I believe that it will only increase clutters in your mind. And I don't think it is that useful a tool. It might only lead to more confusion. Phoenix is saying, so when we decide to keep the imbalance value 3, what exactly is the logic to keep this value? Well, there is no logic. There is no logic. The only thing is a 3x imbalance is stronger than a 2x imbalance and less stronger than a 5x imbalance. What happens? Like in liquid contracts like Nifty and Bank Nifty, A 2x or a 3x imbalance will give you a sufficient amount of signals, not too many, not too less. Okay. So if you look at this bar, it's a 3x imbalance. You get 1, 2, 3, 4, 5 signals where the buyers were stronger. Sellers were stronger at the lows, but then we started moving higher. Buyers came in. It tells us that these sellers were trapped and the buyers have control, and we also get follow through. All right. But on some shares which are not very, very liquid, sometimes a 2x imbalance, it gives you too many signals, too many green boxes to make any sense. So in that case, we can increase the number to 5x. And when you use 5x, it gives you a reasonable amount of boxes. So it will depend on the character of that particular stock. So whenever you're using this imbalance chart, you cannot have a single setting that fits all. You will have to look at the character of that individual stock and then decide whether you need a 2x imbalance or a 5x imbalance, right? But a 5x imbalance gives you greater imbalance when you compare it with a 2x imbalance. Nilesh is saying, can we determine that whether buyers are increasing or decreasing and vice versa for sellers by looking only at order flow internals? Well, see, that is the reason, why I don't like these charts, because uh, all of them look same. All right, all the bars, they look same. It's very difficult to make a distinction. Now let's say here you have 120 and 160. You will find this combination elsewhere too, similar combination. Then how will you make a distinction whether the buyers are increasing or sellers are increasing? The delta values are much better at tracking that. The cumulative delta value is much better at tracking that particular information. So here, when you see a sudden jump after a kind of a sideways move happening, then you see a sudden jump in the delta value. It tells you that there is something significant that is happening on this chart. Do you buy here? No. You wait. You see, okay, prices went higher. They get exhausted. You can see some limit selling happening here. They move sideways. But now that this jump is there in the background, as long as you stay above these aggressive clusters of buy and sell, which we are going to learn in the next session, the clusters, you still have buyers firmly in control of this auction. So as long as we stay above these clusters, we are good to go. Then you see what happens. You see prices coming back down. You see delta again going, subdued. And then what you do, you look at other indicators. Okay, you can look at VSA chart for signs of strength coming in. You can see, like it did not happen in this case, but sometimes you will see right at the lows of such bars, sell imbalance happening. Like these dark red cells, they will happen right at the lows, and price actually goes higher and closes higher. The next bar also goes higher, trapping these sellers. And when that happens, you also get another signal that okay, sellers are coming right at the lows, but then why the bar went higher and closed higher? That is again an entry signal for you. It tells you that these sellers are trapped. If I enter here, put my stop loss here, counting on the fact that these sellers are trapped. Now there is no imbalance here, but if this section was completely red, it would be a good imbalance. And then you can go ahead and trade in the opposite direction of that imbalance. So you have to put it all together. Okay, it's not a single factor that will give you your clear entry or exit. Even on order flow chart, you have to make sense of that whole development. The delta, cumulative delta, delta indicator, divergences, jumps, shifts, all this will help you make sense of the information. But again, please understand, it will never be a digital buy or sell signal. You will have to work hard, think hard, and make sense of the information. Only after that you will be able to take confident trades. Phoenix is asking question number 3. How does the imbalance help in our trading decisions? As I said, here you got a jump in cumulative delta. You got multiple imbalances. stacked one above the other, tells us that buyers are coming in aggressively. Now you wait for, because this cannot just go on and on. On the very next chart, you see point of control right at the top box. Tells me this is very top heavy bar. Not a good idea to buy on these bars. Wait for some easing of price. Okay. This imbalance is still relevant. Prices can even come to this and reverse. They often do. So when this imbalance is happening, can you just go and jump on this trend? You can, but then if the prices come back down and close here, you will be stuck, like these sellers were stuck. All right. So you need to let the charts develop. You have a sign of strength with shift and jump, and then you wait for it to come, maybe show negative delta. Okay. And then jump onto your trades looking at other factors. Having these imbalances in the background gives you confidence that this trend is likely to continue higher. Ankit is saying, based on the current discussion, can we say that order flow is just another additional tool like VSA which can be used for confirmation from our chart trading and helps in taking high confidence trades based on logic context from higher time frame analysis, and how profile structure is developing, but can't be used standalone? Well, see, it does not, it's not compulsory to monitor context on a market profile chart. We do it because market profile chart are probably the best tool to help you monitor context. All right. So when you say it cannot be used standalone, there are traders who are using it in a standalone fashion, but they are also good at gathering context from other sources than a market profile chart or a VSA chart. We, or I personally, the way I have structured this framework, use market profile chart primarily for context, VSA chart for combining context and timing, and then I come to order flow chart for pure timing to look at these shifts, these jumps, divergences, imbalances, stuck buyers and sellers, to make sense whether I should be buying or selling, whether I should trade from the buy side or sell side. So what you say is completely true in this context, in the context of this intensive, when you are talking with me about trading.